your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. We've got a good show for you today. We'll be taking your calls, 855-4-SCHIFF, 855-4-SCHIFF. We got special guest Judge Andrew Napolitano coming up a little bit later in the program, so make sure and stick around for that. Meantime, a lot to talk about, a lot of central bankers, not just the Fed, but the ECB, which earlier this morning came out with a surprise quarter-point rate cut. The new chairman or president of the ECB, Mario Draghi, who just replaced François Trichet, who retired, in his first meeting decides to cut European interest rates from 1.5% to 1.25%, a 25 basis point cut. And of course, he's doing that even though the inflation rate in the Eurozone is now at 3%, which is 50% above its 2% ceiling that is supposed to be the target. So what does this mean with the ECB cutting rates, even as inflation is considerably above its target? Is this a new ECB somehow adopting a dual mandate secretly, kind of like the Fed, although cutting interest rates doesn't really grow the economy. It helps politicians pretend that a contracting economy is growing because of inflation. We'll see. I think now that the inflation rate in the Eurozone is going to hit 4% a lot before it hits 2%. And we'll see what happens when inflation really starts to pick up in the Eurozone. Meanwhile, we've had a lot of volatility in the currency markets, precious metals markets. Gold at one point was up $25 or so on the ETF. It's now cut those losses in half, up about $13. Silver, which was up 60, 70 cents, has now turned negative by about 20 cents. Gold stocks still up, but they've cut their gains in half. Stock market, too, the Dow was up over 100 points. Now only up 35, so you're getting a lot of volatility. Bonds are still lower, not as low as they were. And the dollar is mixed. The euro was initially somewhat higher on the news, at least higher against the dollar. It was lower against gold. It has now turned around. The euro is now down about half a cent at 136.30. But this, I think this is a very bullish announcement for gold. It shows that there's going to be a lot more inflation in the Eurozone. There are a lot of people living in the Eurozone that share the euro currency, and the European Central Bank has just given Europeans another big reason to buy gold, as if they didn't have enough reasons already. But the interesting thing is they're cutting rates, and you're not seeing a big drop in the euro versus the dollar. It had dropped against some other currencies, the Aussie dollar, the yen, the Canadian dollar, the British pound. In fact, the euro is still lower against all those currencies, although now it is also lower against the dollar. But that was not the immediate reaction. Although I think it might have. I think before the announcement, the euro was even a little stronger than it was. It was up against the dollar, and then the news came out, and then the euro paired its gains. But it wasn't until just recently that the euro currency moved into negative territory. Of course, yesterday we got a lot of comments, a lot of sound bites coming from Ben Bernanke, and we're going to dissect some of them now. We've got some sound from Bernanke's prepared statements, his testimony in front of Congress, and we also have some of the Q&A, because that's usually the more interesting part when you actually get to hear an unscripted response, although I know that he probably goes over his index cards and has the answer that he wants for whatever question. And, of course, sometimes if you get a question that you don't anticipate, you just substitute one of the answers that you already rehearsed and just make it fit, regardless of what the question is. But let's start off. We'll play a little bit of Ben Bernanke's opening comments yesterday. Here, cut number 1.
I turn now to the committee's economic outlook. Participants' projections for real GDP for 2011 as a whole have a central tendency of 1.6 to 1.7%. Output growth strengthened during the third quarter, reflecting in part a reversal to temporary factors that had weighed on growth earlier in the year. In particular, global supply chain disruptions associated with the natural disaster in Japan have diminished. Moreover, the prices of oil and other commodities have come down from their peaks, easing strains on household budgets and contributing to a somewhat faster pace of consumer spending in recent months.
Okay, so here again, Ben Bernanke is hanging his hat on inflation coming down, even as it's at now almost 4% trailing, based on the fact that commodity prices have come down from their peaks. Well, oil prices in the month of October, when the month of October began, oil prices were at $78 a barrel. We're now at 93. So 93 minus 78, that's 15. Oil prices are up over 19% in the last month. I don't see how you can draw a conclusion from that inflation prices are moderating based on weakening oil prices. In fact, oil prices right now are very close to a breakout. The chart looks very, very strong for oil. So anybody objectively looking at the price of oil and looking at a chart would have to conclude that the most likely thing for oil prices to do is to rise significantly. So I don't know what Ben Bernanke is talking about. In fact, if you look at another index, which is called the Continuous Commodity Index, and I'm going to bring up a chart of that, that's up big today. It's up 4 points to just over 602. But that index was at 565 a month ago, so 602 minus 565, that is a 6.5% increase in an overall basket of commodities. But to put this in perspective, this index is at 602. 10 years ago, the index was under 200. So in the past 10 years, you've had a tripling of commodity prices. And this is just overall all commodity prices, not just energy. So you're talking about tripling, a 200% gain divided by 10. So you're looking at 20% a year average increases. And in fact, if you look at where this index stood at its peak just before the financial crisis, the index peaked at around 615. And it's almost all the way back up there. And yet it is slightly off its all-time record high, which was set back in April. But if you look at the chart and you look at the trajectory, how anybody can objectively look at this, how Ben Bernanke can look at this 10-year chart and just see how it's moving and conclude that the pressures are waning, that now commodity prices are going to start to fall, and he's going to base his rosy scenario on the assumption that commodity prices are about to fall when they've been rising for 10 years straight and they show no indication of reversing at all. Anyway, let's play a little bit more. This is Ben Bernanke, cut number 2.
The committee expects only a moderate pace of economic growth over coming quarters, reflecting ongoing drags from the troubled housing sector, still tight credit conditions for many households and smaller businesses, volatility in financial markets, fiscal consolidation at all levels of government, and other factors. Looking further ahead, economic growth is expected to pick up somewhat as a result of improving financial conditions, strengthening consumer and business confidence, and the continuation of a highly accommodative stance of monetary policy.
So in other words, Ben Bernanke is basing his assumptions that growth is going to pick up on a couple of things. One, a rebound in consumer confidence. Now, consumer confidence is like at a record low. So what's going to turn it around? I mean, it's been going down, down, down. But the most important thing is he says he expects growth to pick up because he has an accommodative monetary policy. Now, wait a minute. Haven't we had an accommodative monetary policy the entire time? Haven't we had an accommodative monetary policy for years? And he is now ratcheting down. This new estimate that Ben Bernanke has for economic growth is considerably less than the last time he had a conference. So he is ratcheting down his forecasting despite his easy monetary policy. Now, you could argue that maybe the monetary policy, now that QE2 is over, right, we don't have QE3 yet, that the monetary policy is not even as easy as it used to be. Well, if we couldn't get any strong economic growth when monetary policy was even easier, if he believes that easy monetary policy is the key to growth, how are we going to get better growth in the future, given the fact that his monetary policy is not as easy as it was? Anyway, we'll be back. We're going to continue to discuss Ben Bernanke. We don't have any calls yet. If you want to call in, 855-4-SHIFT. The lines are open, 855-4-SCHIFF. We'll be right back here on SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. And we still got some open lines at 855-4SCHIFF. We're talking about Alan Greenspan and his testimony yesterday before Congress. You know, I commented on that testimony. I did an interview yesterday at Yahoo Finance, and you can see that on their website. I did two segments, one on the Fed and Bernanke and the other on the European situation, two videos there. You know, one of the things I mentioned on the Yahoo Finance piece, because I noticed we don't have the sound from it, but Ben Bernanke was asked a question about his policies, and his response was that, well, if it wasn't for my policies, if it wasn't for all this cheap money, the easy monetary policy, the economy would be in worse shape than it is today. And, of course, that's, you know, we're going to keep hearing that. That's Barack Obama's strategy, talking about how things could have been worse. But in some respects, Ben Bernanke is right that had he not come to the aid of the economy with all this cheap money, that in the short run, things would have gotten worse. Now, they might be improving by now, so that's where you might be able to take issue with the chairman on that one. But basically, he's saying it's the equivalent of a drug addict saying, well, if I wasn't doing all these drugs, I'd be going through withdrawal, and that's no good. I mean, I feel much better high than I would feel if I was going through withdrawal pain. So, yes, in that respect, he has saved us from withdrawal by giving us more drugs to keep us high. But what has he saved us from? You know, and ultimately, if we're ever going to, quit the habit before we die of an overdose, we're going to go through that withdrawal anyway. But now, thanks to Ben Bernanke, it's going to be that much more painful a process to endure because of all the extra drugs that we have taken to delay that day of reckoning. Now, I have a little bit more sound. I want to play some clips from Bernanke, first on unemployment and then on inflation, because he comes out and he makes some forecasts on both, although why he makes any forecasts, he's never gotten anything right. So why doesn't he just admit that he doesn't know what's going to happen and just say that he doesn't know? But he always wants to come out with a forecast, pretending he actually knows what he's talking about. Here he is on unemployment, cut number 3.
In light of the anticipated moderate pace of economic recovery, the committee expects that the unemployment rate will decline only gradually over coming quarters. Participants' projections for the unemployment rate in the fourth quarter of 2012 have a central tendency of 8.5 to 8.7%, only about a half a percentage point lower than the latest monthly reading of 9.1%. The unemployment rate is expected to decline further to 6.8 to 7.7% by the fourth quarter of 2014, still well above participants' estimates of the longer-run normal rate of unemployment.
So in other words, he's saying a year from now, unemployment rate's going to be 8.5 to 8.7. How does he know that? I mean, it's at 9.1 now, but I mean, how does he know to within 0.2% exactly where it's going to be? And then 2014, the year-end 2014, so that's 3 years from now, right? So in 3 years, unemployment, at least now he's got a wider band now. He's not as, the target is not as pinpoint. But he's saying it's going to be somewhere between 6.8 and 7.7%. You know, if you could gamble, I would take that. I wonder what an odds maker would lay at that spread, because I'd rather take the outside. In fact, if it was an over/under, I'd take the over. But you know, how does he know? I mean, the guy's been so wrong on his forecasts in the past. You would figure that chances are that unemployment, wherever it is, it's not going to be between 6.8 and 7.7. Because the one thing you probably know for sure, based on Bernanke's track record, is wherever he thinks it's going to be, that's the least likely place that it will be. Anyway, here's what he said about inflation, cut number 4.
I'll turn now to the outlook for inflation. The prices of oil and other commodities rose sharply earlier this year. Consumer inflation consequently picked up over the first half of 2011, reflecting higher prices of gasoline, food, and other goods and services for which producers passed higher input costs along to their customers. In addition, prices of motor vehicles surged in response to the global supply disruptions associated with the disaster in Japan. However, inflation appears to have moderated as those transitory influences have waned and as low levels of resource utilization constrain rises in prices and wages.
All right, so there he goes again, talking about the fact that inflation is moderating, that the temporary, boosts coming from rising commodity prices are transitory. I mean, the guy has got to wake up and look at a chart, wake up and look at prices and see what's actually going on. Prices are rising. I mean, as I said, I went up and I showed the continuous commodity chart and looked at how those prices are going. That is an incredibly strong chart. There is no indication at all that those forces are temporary or that they're going away. I mean, where is he getting that? I mean, the very best Ben Bernanke can say is that it's wishful thinking, that he hopes, it's just he's taking a shot of, it's a prayer. It's a wing and a prayer. The hope, that was Barack Obama's campaign theme, hope and change. Well, we're not getting any change from Bernanke, but I guess it's all hope. And that's what he should say, that, hey, I just got my fingers crossed, and I'm hoping that inflation comes down, because there's no actual signs, there's no actual evidence that inflation is coming down. In fact, all the real-world indicators are that inflation is getting worse. And since inflation is resulting from my cheap money policies, and because I'm keeping them cheap, inflation is going to keep getting worse. In fact, gold, as we mentioned earlier, it started a pullback. It is now making a new run for the high. In fact, the GLD ETF is now at a new high for the day, up the equivalent of about $23. So gold is surging. That is a much better indicator of future inflation than Ben Bernanke's hope that it's going to turn around. Oil prices up almost $1 today. In fact, at one point they were up more than $1, but we've had a little bit of a pullback. We will be back. We've got a commercial. We're coming back, maybe with Judge Napolitano. I'm not exactly sure what time he's coming on. I'm having some technical problems, so either the judge will be back or I'll be back. So stick around. This is Peter Schiff here at SchiffRadio.com.
Peter Schiff Show.
And a black mustache.
We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Rebel Radio, the Peter Schiff Show.
Hi, this is Peter Schiff here at SchiffRadio.com, and we are having some technical difficulties. And for those of you who are trying to call in, there is a problem. That's why I wasn't seeing any calls, and I don't know when that problem is likely to be fixed. Maybe in the last half hour of the show. Our guest, Judge Napolitano, is coming on at the top of the next hour. So we won't be taking any calls during that time period. So I'd say the second half of the second hour of the show is probably the only time we're going to be able to take callers for today's show. And as I said, Judge Napolitano, I wasn't able to see any information coming from the producers, so that's why I didn't know when he was coming on. But I've now been told that he is coming on at 11 at the top of the second hour of the program. Meantime, gold has now made another new high. We're up about over $25, and the pace of the gold rally is picking up. In fact, looking at the gold stocks, the Huey index, the HUI, that is now up almost at the high of the day, up 11 points on the day. We're now breaking out the gold stock index. This is the highest gold stocks have been since September 22nd. We had a very big drop in September in the stock market. Gold stocks in particular, the Huey dropped from 630 September 21st all the way down to a low of 482. I mean, that was a huge decline in a very short period of time. Remember, for something that's supposed to be in a bubble, which of course I argue gold is not a bubble at all, but there was so much fear in the gold market that gold stocks got crushed. Actually the decline was better than 20%. Think about it, from 630 to 580 in about a month. 630 minus 580, that's divided by 630. What is that? No, wait, 480. 630 minus 480. That's a 150 point move. That was a 24% move. Remember, a lot of people on Wall Street define a bear market as a 20% decline. Gold stocks went in a bear market in less than a month, even though gold prices were still solidly in an uptrend. They had been in an uptrend for over 10 years. That's how nervous the gold traders are. In fact, I read a statistic recently that as of a couple of days ago, the underperformance of gold stocks versus gold was at an all-time record low, or at least as far as they've been tracking this index. And, and if you look, I got a chart now of the gold price itself. I mean, this one is a monthly chart, only goes back to '05, but you can't even see. If you look at this monthly chart of gold, you can't even see the September decline. It really doesn't even register. I mean, we didn't even come close to breaking the uptrend that's been in place. I mean, the most recent uptrend started in October of '08 when gold bottomed out at around 660. And that's not even the primary uptrend, because the primary uptrend started a lot longer. We're nowhere near the primary uptrend. But if you just look at the most recent uptrend, we're hugging that line. We have not violated that uptrend since we began that uptrend in October of 2008. Not once. And, of course, the price of gold since that low has gone from, 700 up to now 1,700. It's up 1,000 points, $1,000 an ounce, a huge gain. In fact, it's almost a big enough gain for some of the gold line customers to actually have a small profit. They might have eked out a profit if they actually bought on the lows. I still don't understand. I talked yesterday, too, about the gold line charges. And, of course, gold line is out today vigorously denying these charges, although I don't know what you would expect them to do. They have to come out and deny them. They can't admit it because then they're basically just pleading guilty, so they have to deny it. But it's still amazing to me that with all the information that's out there, that people still go to Gold Line and buy gold. I mean, if you go onto the internet and just Google Gold Line, just go on there and Google it, the first thing that comes up is these criminal charges. So, I mean, and if you read it, how are you going to buy? At least how are you going to fall for the scam when they try to talk you into these overpriced European coins? And how are they going to do that when, that is the whole a controversy surrounding the charges? And the only way they do it is because a lot of their customers don't even go on the internet. They don't shop around at all. Because remember, if anybody shopped around, Gold Line wouldn't have any customers. Gold Line relies on the fact that people don't shop around. That's just it. So maybe even all the information is out there, but they don't get it because all they do is listen to these talk shows and then call up, and that's it. And they just trust the host that recommended them, and they say, "Gee, this company must be legit, otherwise so and so wouldn't have recommended them." And then they just buy whatever they're told to buy because they have complete trust. And that is the problem. So I'm sure that they're going to continue to be able to fool people, even, as this investigation goes on. The arraignments are not until January is what I read. So that's the arraignment. So who knows how long it's going to take until there's an actual trial. Now, I think some people have been trying to make some points over the fact that, hey, these are just misdemeanors. And so it's really not that bad. Why didn't they charge them with felonies? Well, apparently this is the city of Santa Monica, and they don't have the ability to charge a felony. So this is the most that they can do. It's not. I guess if it was brought by the state of California, then maybe there would be felony charges because they're, all of the fraud or the theft is, you're talking about big sums of money. So you would think that would be a felony, and it probably would be a felony if these charges were brought by a different, entity within the state of California. And so that's why they are what they are. But if you think about it, there's 19 counts. So each count has a minimum of 1 year in prison. So you are looking at a potential 19-year prison sentence if they're convicted on all 19 counts. So even though it's a misdemeanor, It adds up. Now, the fines are trivial because the maximum fine is $10,000. So even if they got the maximum fine on all 19 counts, you're talking about $190,000 fine. That is peanuts. I mean, their legal bills are going to be a lot more than $190,000. So the fine obviously is trivial when you're dealing with these misdemeanors. Although what might be a much bigger issue for Gold Line is not going to be the fine, but compensatory damage to the extent that there are lawsuits that are ultimately filed against the company by customers. Certainly, if they lose this trial, that gives their customers a very strong lawsuit. Because remember, there are a lot of people. Gold's at $1,700 an ounce. There are a lot of people who bought gold at $1,200, $1,300 an ounce who think they made money. Because after all, they bought gold. It's up 30, 40, 50%. They must have made money. They didn't. They didn't make any money. I mean, if they bought these European coins through Gold Line, or anybody else for that matter who marked them up to this degree, they didn't make any money. But I'm convinced that most of their customers don't know that. Most of their customers assume that they've made money. In fact, they're probably buying more. Some of their customers who bought gold when it was $1,200 an ounce, who see it at $1,700, who don't realize that if they were to sell their coins now, they wouldn't even get the $1,200 they paid. They might get $900. They don't know that because they haven't tried to sell. So if they're buying more, and of course, if they're buying more, they're paying a lot more than they paid the last time. Because maybe when gold was at $1,200 an ounce, right, and they bought their gold, and they paid, let's see, 1,200 times 1.7, so they paid about $2,000 an ounce. Remember, a Gold Line customer, when gold was around $1,200, paid $2,000 an ounce for their gold. Now that gold's around $1,700, they're going to be paying almost $3,000 an ounce for gold. So in their mind, hey, the last time I bought, I paid $2,000 an ounce. Now I'm paying $3,000 an ounce, or the equivalent for the coins. They probably don't think in terms of ounces. They probably think in terms of what these coins cost. So maybe I paid $400 for one of these coins last time I bought them, and now they're charging me $500. Well, okay, my other coins must be worth, I must have made a lot of money because I'm now paying a lot more for the coins I bought before. No, they're still losing money on the coins they bought before because of the huge markup. It's just that now there's a huge markup on top of an even higher gold price. So a lot of the customers think that they're making money. And the reality is they're not making money. And they're going to figure that out. I mean, these lawsuits, and then they're going to have all these, the lawsuits are going to come. And this trial is going to bring a lot of that to the forefront because a lot of people that don't know they've got ripped off are going to find out, and so that's ultimately going to be where the damages are going to go. And there's a lot of liability because think about how much the price of gold has actually gone up, and think of all the profits that Gold Line customers missed out on because they called up to buy bullion and instead they overpaid for these European coins. Gold Line could be on the hook for a tremendous amount of money. They've been doing this for a few years, so this is a huge legal liability that is hanging out there. Meanwhile, as I'm talking, I mean, this gold rally is really gathering steam now. Gold up almost $30. The Dow is up, too, up $100 or so, up 100 points. But what is the driving force behind this rally? It is inflation. In fact, even the euro now has reversed the decline. When I started this show, or not even a couple of segments ago, the euro was down 0.5 cent. Now it's up 0.5 cent. It's back above 137. And so even with a rate cut, and I've heard a lot of reporters ask me, they say, how is it possible that the euro is rising? Why isn't it falling? With all this stuff going on in Greece, why isn't the euro going down? And the answer is that's how weak the dollar is. That's the problem, that the dollar is in worse shape, that despite all this stuff going on in Europe, the dollar still can't have a meaningful rally. So imagine what's going to happen to the dollar when the European situation is resolved. Meanwhile, look at crude oil prices, now back over $1 a barrel. I think we're very close to this short-term breakout. We close above, I think the high of this pennant now is about 94.5. I think we're coming above that. I mean, we're going to have a quick shot at 100. We could be back at $100 crude next week. I wonder how high the price of crude oil has to go before Bernanke even notices it. I mean, he seems to be talking about commodities all the time as if they're going down, which creates the impression that he's paying attention. But, of course, if he were paying attention, he would notice that they're actually going up, not down. Anyway, we'll be back. You're listening to the Peter Schiff Show here at SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
And we are back. This is Peter Schiff here at SchiffRadio.com. Can't take any calls right now. We are having some technical problems. Hopefully, if you do have a call or a comment, you can make it in the final half hour of today's show. Coming up after this break, we've got Judge Andrew Napolitano, who will be the guest. And then we will be taking calls for the remaining half of the second hour. Meanwhile, I want to continue dissecting some of the comments made by Fed Chairman Ben Bernanke at his conference yesterday. First, a little bit more on what the Fed Chairman had to say about inflation and how he continues to misrepresent, and that's a kind word, the situation with respect to inflation. Here, cut number 5.
Furthermore, survey measures and market indicators imply that longer-term inflation expectations have remained stable. Consequently, the committee anticipates that over coming quarters, inflation will settle at or below its mandate-consistent rate of 2% or a bit less. Specifically, the central tendency of participants' inflation projections is 2.7 to 2.9% for this year, but declines to 1.4 to 2.0% in 2012 and remains subdued through 2014.
All right, so here he is saying that inflation is going to decline. It's already at 3.9 is the trailing level. I mean, that's where it is right now, and it's trending higher. And he is saying that it's going to do an about face. It's going to come back down to 2.7 to 2.9, and then it's going to decline to between 1.4 and 2% in 2012, and then remain subdued for 2013 and 2014. How does he know? How does he even have a clue where it's going to be, especially when he got it so wrong for 2011? Look at how much higher inflation is than what he thought it was going to be. And again, of course, this is based on the government's measurement, which is understating by a long shot the true rate of inflation. And how can he say that inflation expectations have remained subdued when the price of gold keeps hitting record highs? I mean, why are people buying gold? People are buying gold because they're worried about inflation. I don't care what other people say, what the reason that people are buying gold. There's only one reason that you buy gold, and that's because you're worried about inflation. You're worried about paper money losing its value. There's no other reason to buy it. This nonsense about, well, people buy gold because they're uncertain. Well, why would you buy gold if you're uncertain? I mean, because if you're uncertain, wouldn't your uncertainty also include being uncertain about gold? In fact, I mean, wouldn't plenty of people be worried? And they say, well, when there's a crisis, people buy gold. Well, why? If you just buy it when there's a crisis, then when the crisis is over, wouldn't you sell it? I mean, and then the price would come right back down. So why would you want to buy something in a crisis knowing that as soon as the crisis is over, the price is just going to go right back down? So if it was simply because you buy gold when there's a crisis or you buy gold because of uncertainty, those explanations don't make any sense. And remember, those explanations are coming from people who don't actually buy gold. If you ask the people who are buying gold why they're buying it, instead of the people who aren't buying it trying to figure out why other people are buying it, but if you ask the people who are buying it, they're all going to give you the same answer. They're buying it because of inflation. They're buying it because the dollar or the euro or the yen or whatever country they happen to live in, whatever the currency is, they think it's going to go down. I mean, you might say, gee, why don't you put your money in the bank and earn, 0.5% or 1/4%? Why are you putting it in gold and earning nothing? And the reason is because you think that the value of the dollar will decline by more than that little bitty interest rate that you're going to earn. If you're worried about your currency losing value, that is worried about inflation. Right? People say, I want to protect my purchasing power. I want to store value. Store value from what? From inflation. So you have all of the market indicators of inflation flashing in big neon lights. Inflation, inflation, inflation. The Fed is too loose. The Fed is too loose. And what does Bernanke take from this? Hey, nobody is worried about inflation. Well, maybe the only one that isn't worried about it is Ben Bernanke. Or maybe he's so petrified of inflation, he's so scared out of his wits that all he can do is lie about it because the truth is that is so scary. In fact, I don't know if anybody was a Halloween, but I think if someone came trick-or-treating at his door dressed as inflation, it would have scared him out of his wits. But anyway, let me play a little bit more. Here is Steve Leisman from CNBC asking him a question about pressures from Congress. Here, cut number 6.
Although we must be accountable to Congress over the longer term, in the short term, it's very important that the Fed be free from political pressures. And therefore, we're going to make our decisions based on what's good for the economy, and we're not going to take any politics into account. Now, the concerns that have been expressed relate to the possibility that the Fed's highly expansionary policies might be contributing to inflation risk. I would simply point to the record. If you look back for the last 5 years, inflation, although it's been volatile because of commodity price fluctuations, has averaged about 2%, which is close to a reasonable definition of price stability, whereas the area where we have fallen short, obviously, is on the unemployment side. So I think that criticisms based on the concern about inflation have so far at least not proved to be very valid.
Well, first of all, his easy monetary policies aren't going to contribute to inflation. They are inflation. They are the cause of inflation. They are the definition of inflation. Now, he's saying, hey, look at the record. We have an average rate of inflation of 2%. Well, I don't even think that's true. But if it is an average of 2%, it's only because for a while it was 1%, and now it's moved up to close to 4%. But if you average the lower inflation of the past with the higher inflation that we have today, then you can say you got an average of maybe 2%. But the average doesn't matter. It's the direction that matters. Look at where prices are now. Look at the direction of inflation. It is accelerating. It is getting worse. Yet he's still looking in the rearview mirror and claiming success based on the fact that inflation was a lot lower a few years ago than it is today. Well, given the trajectory, given what's happening, what is he going to do about it? And all he says is that, well, I think things are going to turn around. But what is he doing to turn them around? Nothing. He hasn't changed his monetary policy. He's got the pedal to the metal. He's not doing anything. Yet he thinks if he continues to keep cheap money flowing through the economy, that somehow the increase in consumer prices that has resulted from the easy money of the past is somehow just going to do an about face and turn around on a dime. And, the interesting thing is he's responding. We didn't hear Steve Leisman's question. It had to do with a letter that was sent to the Fed chairman from Congressman, basically telling the Fed, hey, no more QE, no more money debasement. And he's basically saying, look, the Fed is independent. We're going to make our decisions based on what's good for the country. See, this is like a twilight zone. It's like a bizarro world because normally you would have a Fed that was really tight. And the politicians would be saying, we need cheap money. It's usually the political pressures are for loose money, and you have a stingy Fed that's taking away the punch bowl and that is bearing the brunt of all this political attacks. Now you have some congressman actually saying, you're too easy. You're creating too much inflation. And it's the Fed that's saying, no, we're going to resist the calls to be responsible, and we're going to continue to be reckless because that's what's good for the country. Anyway, we'll be back. We've got another full hour coming up with the Peter Schiff Show. When we get back, Judge Napolitano is our guest. You're listening to the Peter Schiff Show here on SchiffRadio.com.
The Peter Schiff Show.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
Call in now. 855-4-SCHIFF.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. The second hour is underway now, and joining the show is Judge Andrew Napolitano. He's been on the show a couple of times before. He is a senior judicial analyst at Fox News. He hosts his own show, Freedom Watch, on Fox Business, the best news show on television. He is also the author of the recent book, It's Dangerous to Be Right When the Government is Wrong, the Case for Personal Freedom. And, Judge, nobody knows more about how dangerous it is to be right when the government is wrong than my father.
Yeah, that's for sure, Peter. Thank you very much for having me. Thank you for the generous introduction. It's a pleasure to be on Schiff Radio. Your father and I, as you know, had spoken publicly in his defense years before you and I met it, before I knew he was your father. I knew of you and knew of him and knew the last name. I just didn't make the connection.
Last week we just
incarcerated for expressing an opinion about the state of federal law, something you and I do every day.
Yeah, and we just filed a few days ago another appeal to have the conviction thrown out, and it should have been thrown out a long time ago for a number of reasons. But I asked the lawyers, how long is it going to take to get a ruling on this? It's probably like a year, But meanwhile, he's almost 84. I mean, the process is so slow. But one of the issues that we're appealing on, and that you might want to comment on it, is that part of the element of tax evasion is willfulness. It's not a question of did you pay your taxes, but did you believe that you had a legal obligation to pay the taxes, and then did you, despite that good faith, that belief, not pay them? So my father's defense, part of his defense is, look, he believed that he didn't owe these taxes for legal reasons. Yet the judge refused to allow him to present any of the evidence that would support that. My father wanted to introduce into evidence the Supreme Court cases that he relied on to formulate his opinion. The judge refused to allow any of those cases in. My father wanted to introduce his books that he wrote, introduce some of the seminars that he conducted that were on tapes. Not only did the judge refuse to let them in, but the government actually claimed that one of the reasons my father was guilty was because he helped people, he encouraged people to break the law in his books and in his videotapes, yet the government objected to the introduction of the very books and tapes that they claimed my father, encouraged people to break the law, yet my father's the one that wanted them in, and the judge wouldn't allow them in. My dad had all sorts of other witnesses that would have testified that they thought my father was correct and that he believed in what he was saying. They wouldn't let him in. In fact, my father wanted to introduce an opinion that was written by the American Journal of Taxation with respect to his earlier conviction of tax evasion, where the American Journal of Taxation said that he was wrongly convicted because in his first conviction, the jury actually came back and asked the judge, does the government have to prove an affirmative act of evasion? And the judge came back and said, no, you don't. You can convict them even if the government doesn't prove their case. And so he was convicted. And then the Journal wrote this up and said, does this rewrite all of our tax law? And basically they said, well, Irwin Schiff is a tax protester, and so the law doesn't apply to him. And so it's only for Irwin Schiff that they didn't have to prove it, but anybody else they would. But my father wanted to introduce that. And again, the judge said, no, you can't. The judge wouldn't even let my father put on a case because they wouldn't let him bring in any evidence or any witnesses that might have shown the jury how he formulated and why he formulated the beliefs that he did. So that's one of the issues that we're appealing on.
Well, as strange as the scenario that you just described sounds, it is essentially an accurate description of what happened to your father. Some of the cases that I describe in the book, It's Dangerous to Be Right When the Government is Wrong, manifest a new trend in federal prosecutions, Peter, arguably commenced with your father, and that is where federal prosecutors persuade federal judges that they don't have to show what's called mens rea, meaning a guilty mind, meaning an actual intent to break the law, and that as long as the law was technically broken, the defendant is guilty without having to prove this intent. If federal prosecutors succeed in doing this en masse, then they will effectively be converting acts of negligence into crime. And we are all guilty of some negligence at some point in our lives because we are all imperfect. That would enable the government to incarcerate almost anybody it wanted for almost any reason it chose at almost any time it wished. So though your father was one of the first and certainly the most notorious victims of this, it has commenced an ugly and horrendous trend. This has not succeeded beyond the appeals court stage. That is, most appeals courts have just said, we don't want to hear this argument. They haven't said the government can do this. But the more the government does this, the higher up the food chain, I'm talking about going from trial court to appeals court to the Supreme Court, this will get. And your father, regrettably, and I hope he's out soon, will become the poster boy or the poster senior citizen, as the case may be, of this type of horrendous, horrific, unlawful, unconstitutional law enforcement in America.
Yeah, in fact, one of the Supreme Court cases that he wanted to bring in was a Supreme Court case that actually said that, you know, relying on a prior decision of this court is not a crime, and that if you in good faith rely on a decision of the court, and
right.
that can't be, and again, they wouldn't even let that in because they didn't want the jury to see it. They didn't want, you
right.
know, and so this whole idea that, well, it doesn't matter what your intent is. If the government says you did it wrong, then you go to jail. I mean, it really changes the entire nature of our judicial system.
Well, if the government can get away with this in large numbers, it will change the tone of our judicial system. Another ugly trend to which I point in my book is the new area of prosecution, which is prosecuting people for failing to report the criminal behavior of others. Now, this, of course, will reduce us to East Germany. And at the height of the power of the Communist Party in controlling the government in East Germany, where it could prosecute whatever it wanted, the most frequently prosecuted crime was not murder, rape, robbery, or even espionage or treason. It was failure to report your neighbor. And as a result of these prosecutions, it resulted in a lot of false reports. So people were being prosecuted for failure to report what they saw, and then people were reporting things that they saw that weren't really crimes, and those people were being prosecuted. It began a horrific snowball effect of essentially prosecuting innocent people for failure to speak up, even though in America you have the right to remain silent.
We already have that, Judge, in the brokerage industry. We're already required now under the anti-money laundering laws. We have to spy on our clients, and if we think our clients are evading taxes, we have to turn them in, and if we don't turn them in, that's a crime. We could be prosecuted, and you know it ain't easy spying on all your clients. It's expensive, and of course I don't like doing it, but that is the society that we live in today. Anyway, we got a break coming up. We'll come back and discuss more in detail your book, and I'd like to, if there's any specific examples that you get into, it'd be interesting to talk about it. We'll be back. This is Peter Schiff here at SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
We are back. This is Peter Schiff, only without the judge. Napolitano had to leave. He had a last-minute Fox hit he had to do. I didn't realize that. If I did, I would have spent less time talking about my dad, because I did want to ask the judge a little bit more about his book and what other cases he is discussing, because I think the real culprits here, I mean, I talk a lot about the Federal Reserve and Congress, but really I think the judicial branch of government probably is the most culpable. I think that's where you've had the greatest failures, and I wanted to see if the judge would agree with me. He probably would. Because all this stuff that is being done to us, all this bad policy is unconstitutional. And who is it responsible for making sure that the government obeys the Constitution? And that is the Supreme Court. And that is the appellate courts, the judicial system. And that is the institution of all the institutions of government that has failed the American public the most. I would say it is the judges. And ironically, the judges probably have more respect. If you probably asked, for opinion polls of, how do you regard politicians, or how do you regard Congress versus Supreme Court justices, I'm sure there's, the public is much more receptive of the Supreme Court. They probably see them in a much more favorable light, and they shouldn't. It is a very, very dangerous, destructive group of individuals who have occupied that court over the years and the lower courts. And they have really failed in providing the checks and balances that our framers had hoped and had expected the judicial branch to exercise. And I think that is the real problem. We really should have an Occupy the Supreme Court movement going on. That would be a very appropriate and maybe, who knows, if be effective place for people to protest. Anyway, let me go back. We are taking calls now. The call system is working, so people are free to call in right now if they want. 855-4-SCHIFF is the number to call. There's nobody in the queue, so you'll get right in. I think people were probably waiting for the last half hour because, like me, they thought that the judge was going to be coming back. Anyway, I want to play a little sound from President Obama. He made a speech yesterday basically saying that God would be in favor of his jobs plan. And so invoking the Lord as a reason to pass it because it's something that God would want. Anyway, didn't realize that he had a direct channel to the Almighty, but apparently he does. It would be the first time that someone in the White House was claimed these powers. But anyway, here is President Obama, cut number 11.
And if Congress tells you they don't have time, they've got time to do it. We've been in the House of Representatives. What have you guys been debating, John? You've been debating a commemorative coin for baseball. You had legislation reaffirming that "In God We Trust" is our motto. That's not putting people back to work. I trust in God, but God wants to see us help ourselves by putting people back to work.
Okay, so God wants the government to put people to work. Now, I don't know how that's the definition of helping yourself. Helping yourself means you help yourself, not relying on government. Relying on government is not helping yourself. In fact, relying on government is the exact opposite of helping yourself. That's relying on your neighbor to help you. In fact, if anything, God would be very much against this proposal because it is not allowing people to help themselves. It is forcing somebody's neighbor to help you at the point of a gun. That's what it is. Anyway, listen to his press secretary, Jay Carney, is actually defending this line of reasoning. Here, cut number 9.
I mean, isn't it a bit much to bring God into the jobs today?
Well, I believe the phrase from the Bible is the Lord helps those who help themselves. And I think the point the President is making is that we have it within our capacity to do the things to help the American people. And that's why he's working so hard to get Congress to take action on the American Jobs Act and the provisions therein. And because he believes it's in the interest of the American people that action be taken.
So I don't understand how you can interpret, the Lord helps those who help themselves, right? Themselves, into the Lord helps those who rely on the government to help them, rely on other people. I mean, what part of the word themselves is so confusing to President Obama and to his press secretary that they don't understand it? Somehow, I guess it reminds me of Bill Clinton, the meaning of the word is. I guess it depends on what the meaning of the word themselves are. If themselves, do you mean that you force your neighbors to help you at gunpoint by taking their money under the guise of taxation? Is helping yourself saying, hey, my neighbor has a lot of money. He doesn't need all that money. Let me take that money away from him and use it to help me. Is that what he's meaning? That when the Lord says that God helps those who help themselves, does it mean that God helps those who help themselves to other people's money, right? In other words, God helps those who steal. Is that what this is all really about? I mean, maybe he needs to go back to Sunday school and take a class and relearn the meaning of the Bible, because nothing that the president is doing is going to be something I think that you can find a biblical rationale to support. But anyway, again, the number to call, 855-4-SCHIFF, 855-4-SCHIFF, to be part of the program. The first caller is Andrew, who's calling all the way from Japan. Oh, no, or calling from Florida, asking me about Japan. My mistake. Andrew, welcome to the show.
Hey, Peter, how are you?
Good.
I'm just calling to say that I thank you for your explanations. You make it really easy to understand economics. And when you explain it, it makes sense. But I just want to, I don't know, like I said, I just want to make sense of what these people are thinking. I mean, why Japan is debasing their currency, why Greece is doing what they're doing, why all these countries are doing what they're doing, what's the rationale behind, why do they think that's the right path? Because I hope you know what I'm trying to say.
Yeah, well, they're all following the same Keynesian playbook. I mean, all the people who are in top positions in central banks or top economic positions around the world, they're all the same type of people. They're all cut from the same cloth, so they're all making the same mistakes. You know, we don't have a monopoly on this wrong way of thinking, but in all these other countries, there are smaller groups of people, like here. There are Peter Schiffs or people like me in other countries who are criticizing the policies. They're criticizing the policies in Japan. They're criticizing the policies in Europe. But, you know, the leaders are all making the same mistakes. It is an ideology that is permeating the entire globe. It's not just America. You know, and remember, a lot of these people were educated in our universities. A lot of the top economic advisors in other countries studied economics in America. That's part of the problem.
Yeah, but why do they keep doing it if it's obvious that it doesn't work? And when you explain it, it makes so much more sense, you know? I mean, why?
Well, number one, it's not obvious.
Doing their own thing? Are they doing it on purpose?
Well, one thing is it's not obvious it doesn't work. That's the problem. I mean, a lot of people think it works, even though it doesn't. But it also, politically, it's a lot more expedient than doing the right thing. So the thing is, Keynesianism works politically. It serves the interests of politicians who want to get reelected. So that's why they do it. This bad economic policy is good politics, right? Good economic policy is bad politics. It's the politicians that are choosing what policies to implement. So what do you think they're going to choose? They're going to choose what's good for them. They're going to choose what's good politics. They're not going to sacrifice their political career to help the country. Why would we expect them to do that? After all, they're politicians. They're not statesmen. They're not in it for the country. They're in it for themselves. Anyway, hey, thanks for your call. We'll be back. We got a lot more of the Peter Schiff Show coming up here at SchiffRadio.com.
The Peter Schiff Show.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Red Radio, the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. 855-4-SCHIFF is the number to call, 855-4-SCHIFF. Well, the stock market rally is now resuming. We're now back up well above 100, up 130 points on the Dow. The gold rally has kind of stabilized with the GLD ETF up just about 20 points. The gold stocks holding on to their early morning gains. You know, I just saw a note that the saying that the Lord helps those who help themselves isn't even from the Bible. It's just an old saying. I'm not really sure where it originated, but apparently it did not originate from the Bible. You'd have thought maybe the White House would have researched that a little bit before they made it a part of their press conference. You know, if you're going to pretend that the president is a man of the Bible, well, I guess he ought to understand what's actually in the Bible, or no. But anyway, let me go back to the phones. Next up is Brian, calling from Hoboken, New Jersey. Brian, welcome to the show.
Thanks, Peter. It's funny you just mentioned that because my call's related to that. But this morning I'm watching Morning Joe, and Ron Paul was on, and, he once again was explaining so eloquently that we need to make a freer economy, cut entitlements. And Joe Scarborough, is in full agreement with that type of stuff. Then less than an hour later, Joe had another guest on, and he was some type of religious guest. I don't remember his name or exactly what he was standing for, but they started reading, passages from the Bible that did say, something to the effect of, thou must take care of the poor and thou must take care of thy neighbor. And once again, Joe Scarborough is in full agreement. And, to me, Joe represents a large part of the conservative base, this religious conservative base, that has a glaring contradiction in their morality.
Well, but did he look? There is a big difference between taking care of the poor on an individual basis and having the government do it, because what the government has to do is steal from one person. I don't think there's a biblical justification for having the government steal from somebody to help the poor. I think the whole point about the Bible is that people voluntarily help the poor themselves by giving of themselves directly to the poor, not having a third party seize their money under the pretense of giving it to the poor. Because, one of the problems with that, apart from the morality of it, is if I give $1 to the poor get the dollar. If the government takes $1 away from me, the poor get 10 cents. 90 cents goes to the government bureaucracy. And I don't think when the Bible is talking about charity, they're talking about it in that sense, where you have to run everything through a government bureaucracy to reduce the charity by 90%.
Yeah, and I agree with you. I don't think the Bible, justifies what the government does, but there's still a contradiction in one's own moral code. If they feel they're living on behalf of another person, why wouldn't you want entitlements, from your government if you believe it's your obligation to live on behalf of the poor?
Yeah, but did Joe Scarborough say that he thought that the Bible meant the government is the one that's responsible for helping the poor, or did he say that we as individuals are responsible for helping the poor?
And, I don't think he said the government. I'm sure he meant...
Yeah, so maybe there wasn't a contradiction. You have to look at it, because you can still believe that human beings have an ethical or a moral or a religious responsibility to help take care of those that are less fortunate. And I would agree with that. What I don't agree with is that the government then has the right to take from some people, because you cannot justify the means based on the ends. You can't say, because I have a worthy cause for this money, I can steal, right? You can't rob from the rich and give to the poor. Everybody will say that that's wrong. Even if the thief has good intentions, you still have no moral right or legal right to steal from somebody, even if you're going to give what you steal away to the poor. But if that's true, if the thieves work through government, it doesn't change the morality. Just because people vote for someone to steal and then give the money to the poor, somehow it doesn't validate theft just because we voted for the thieves.
Yeah. I just still think you shouldn't. When you have a strong belief that you live on behalf of the poor, then it's hard to argue against the entitlement. That's why I think, you just need to look back and say, it's okay to want to give to the poor because it makes you feel good. It makes your value system be aligned. But so you shouldn't force it. But to me, if you're going to preach strongly that it's your obligation for the poor, well, then you may as well pay for a welfare state for the poor.
But of course, yeah. And another advantage of having individuals help the poor is they have a vested interest in, A, making sure that the recipients of their charity are really poor and really need it and are not just gaming the system, and that are not just getting money even though they don't need it. And, of course, when individuals help the poor, the goal is to help lift them out of poverty so that they're no longer poor and no longer need the help. But the government's goal is the opposite. Government wants to keep people impoverished, so it keeps getting their votes. So government poverty programs are aimed at perpetuating poverty. Private sector poverty programs are aimed at eliminating it.
Yeah. Okay, great. Thanks.
All right, thanks for the call. Next on hold is Barry calling from Illinois. Barry, welcome to the Peter Schiff Show.
Thank you, Peter. You brought up earlier the Supreme Court. I wanted to mention a particular failure of the Supreme Court and just bring it up for you there. The Tompkinson case in June 1st of 2010 removed the Miranda and now the victim must assert his Fifth Amendment rights while he's being tased, or there is no Fifth Amendment for that person. Now, there are too many cases like a poor person, a minority, someone who doesn't comprehend his rights. How about somebody who doesn't speak English well or doesn't speak English at all? And police are trained, to be very overbearing when they're trying to accomplish certain arrests and things like that. So the Fifth Amendment has been made an alienable right by the Supreme Court, and Miranda was the thing that separated us from the apes. And so,
well, basically, before Miranda, the idea was, look, if you don't claim your right, it's waived. So that if you don't assert it, then the assumption is you've waived it. But yeah, I agree that rights should not be so easily waived, especially by somebody who doesn't really contemplate the consequences. And I think the spirit of the Fifth Amendment is that you're not going to be a witness against yourself, whether you know it or not. So I think that in order to waive the right, I think you really should be informed exactly what the right is, and the fact that if you choose to say something that you will have affected, you will have waived your right, because obviously if you go and say something and it's used against you, you can't go back and claim the Fifth Amendment if you voluntarily. That's part of the problem with the income tax, is that the reason that the income tax is based on voluntary compliance, although now they pretend it's compulsory, but the reason from a technical point, and this is a big argument that my father has made for years as part of his argument, one of the reasons that filing an income tax return is voluntary is because if the government wants to charge somebody with tax evasion, and basically they're going to show, here's your income tax return, and you lied on that return because your income is more, or you didn't report something. Tax evasion always starts with the government introducing the defendant's own tax return and using that tax return against him. Now, if the defendant objects and says, my Fifth Amendment, that you can't use that against me because I prepared it, the way the government always gets around the objection is says, well, you filed it voluntarily. You're not required to file that tax return. Income taxes are based on voluntary compliance, and so because you filed that return voluntarily, you waived your Fifth Amendment rights, and now we can use this tax return against you. Now, of course, when my father figured that out, my father said, well, if it's voluntary, I'm not going to volunteer. And then the government's response was, well, you have to volunteer. And if you don't volunteer, we're going to put you in jail for not volunteering. So how can something be voluntary and compulsory at the same time? It obviously can't, but that's how corrupt our judicial system is.
I agree, and I don't know how it could be reversed. Thank you for taking my question.
Hey, I thank you for calling. Next on line, we have Jack calling from New Orleans. Jack, did you go to the New Orleans conference?
Well, I know you were going to get on me for that because I intended to go, and I got a virus, and I was really sick.
Oh, I'm sorry to hear that. I picked something up where I'm a little bit sick coming back from New Orleans, so
well,
there might have been something going around. I don't know. But anyway, what is your comment or question?
Well, it was about the Harry Dent interview. I had a bad experience with Harry Dent, and I don't think he was telling you the truth, because he was pretty much my guru from the 2000 on, and I invested in the stock market, and he said and got his newsletter, and he said get out in 2010. Well, I said I'm gonna be skeptical. I'm gonna get out in 2009. And then at the end of 2008, the market started to dive, and he basically said, no, look, hang on until election time. It's going to go up till election time, and of course, lost even more. So he never did tell people to get out and get into commodities or real estate or whatever. I mean,
were you a subscriber to his newsletter?
Yes.
Well, when was the first time in his newsletter when did he turn bearish? When did he say, I'm no longer bullish on stocks? Because he was looking for, Dow 40,000, at one point. So when did he say, hey, I've changed my mind, get out of the stock market?
Well, he didn't. As a matter of fact, I mean, he said,
He's saying, he's certainly saying get out now, right? He's telling people not to buy stocks now. So do you know when did he change from telling people to buy stocks to telling them to sell them?
No, I don't, because after 2009, I canceled my subscription. I was so angry because I lost a tremendous amount of money by hanging on, waiting for that final rally before I exited.
All right, but therefore at no point prior to 2009 did he say get out.
No, I mean he came off the 40,000 thing, obviously. It never comes. But
anyway, hold on. I want to ask you another question. So we got a break. So stick around. I'm going to continue this discussion of the Harry Dent letter when we get back. This is Peter Schiff here at SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back. This is Peter Schiff here at SchiffRadio.com. We have got the last segment of today's show. On the line is Jack from New Orleans, Louisiana, who was a subscriber to the Harry Dent investment letter until, I guess, the end of 2009. And, Jack, I wanted to ask you, so you were reading the Harry Dent newsletter. When did you start reading it? Early 2000?
Sometime early 2000, yeah. Early 2000. I'd been to a speech that he made and got sold on the idea, and actually I had quite a bit of real estate, and I sold it all and got into the stock market. And
so did Harry Dent did he have any warnings during that time about the real estate bubble and the fact that he thought real estate was a bubble that would pop and that it would it would be damaging to the economy, or was that part of the letter?
Well, not the way it turned out that you did. I think he basically said, when the crash hits, which would be in 2010, then everything was going to go down, and then he recommended in the next decade that housing, like single-family, small housing, would be a great investment because, the economy would be terrible, but there would be a lot of young people who would need starter homes and so forth. So he said for this decade, that was going to be a future investment. And he did say that everything was going to go down. I mean, when we had
So his problem then was his timing. He thought everything was going to go down in the decade the decade that we're in now. He thought that it would keep going up. So where he got it wrong was that it hit the fan in 2008 and not in 2011. And so he was hanging out looking for a bigger rally, and ultimately it didn't happen.
Yeah, and of course I was going to get out before the end. I wanted to play it safe by a year. And then when it started to go down, I think, they were looking for it to go, I don't know, 17, 18, something like that. And when it started to go down, he said, no, and I even called him, and he said, no, look, it'll go back up to at least, don't get out yet, it'll go back to at least 12 or 12.3, and then you can get out, you won't have lost so much, And, of course, it never did.
Yeah, well, it was a difficult, although I was pretty bearish on the market at that time, but I also thought the dollar was going to go down, and the dollar ended up going up, and that kind of, ended up putting more pressure on foreign stocks and commodity prices than I had anticipated, although I did think that, foreign stocks would go down in sympathy with the U.S. market. I thought the U.S. market would have gone down the most because I kind of overestimated the intelligence of most investors to recognize what the real problem was. But they couldn't see it beforehand. The amazing thing was even after it should have been, crystal clear, most people still couldn't figure out what the real problem was. They still don't know what the problem was.
No, I agree. And, of course, I think everybody knows that there's problem right now, as he recognized, but you and have the same problem, same disagreement with Robert Prechter. Then, they both think that we'll have deflation because of the private credit collapse, and that the Fed will not be free to continue to inflate because the Congress is going to change and the politics.
And I don't see that. And I don't even see this big decrease in the private sector debt. I mean, private sector debt is still there, and some of it is being transferred to the public sector, like the student loans. I mean, you take all these student loans and just put a big chunk of the existing student loans on the government and take it away from the people. The debt's still there, and it's still going to be monetized.
It's just such a big risk. I mean, I'm very heavily invested, along your theory, and if it goes the other way, then I'm going to get hurt pretty badly.
Well, if it goes the way Harry Dent thinks it's going to go, everybody is going to be hurt except people who have their cash under their mattresses. Because if it goes Harry Dent's way, a lot of people are going to lose a lot. The government's going to have to default on its bonds. That's why I pointed out his contradiction. The only way we can have the type of deflation that Harry Dent is envisioning is if the government defaults. I mean, they can't pay in full without inflating. So you're going to lose if you're in treasuries. Banks are going to fail under the Harry Dent model, and the FDIC is not going to be there. The government can't print the money up to make the depositors whole. So, everybody's going to lose under the Harry Dent model unless you've just got a bunch of money stuffed under your mattress. Because if it's in a bank, so the government has, so my thinking is the government's not going to let all this happen, that they're just going to print money. And, of course, the wild card is when do foreign central banks unload all the dollars that they're holding on to? Because that's going to unleash a tidal wave of inflation. The only way I think that you get the deflation scenario is if you price everything in gold. And if you price things in gold, I think Dent and Prechter are 100% right. Prices are going to tumble in terms of gold. That's why I want to own gold. I don't think prices will tumble in terms of dollars because we're going to print too many of them. Anyway, Jack, thanks for your call. We move on to Dallas calling from California. Dallas, welcome to the show.
Hi, Peter. Hey, the last couple of years, I've been buying investment-grade gold and silver bullion with my personal income that's, been taxed anyways. And as I kind of look towards the future, I've been figuring out kind of an end game and when it comes time to sell this bullion. And I've been discouraged to find out that the IRS categorizes gold and silver, even an investment-grade gold and silver bullion, not collectible coins or anything, but they consider them a collectible, and they tax them such so. So they tax, so by the time I sell my gold and silver, I'm going to be taxed 28% on any profits that I made from it. So
yes, 28% profits, plus you're going to pay whatever. If you live in a state, you're in California there, you're going to pay another 9% tax there. So 28 plus 9, that's 37%. And, of course, that's assuming that by the time you sell your gold and silver, they haven't raised those taxes because you never know. But, yeah, that's something that you should have known going in. The only way that you can get around that is you can buy a closed-end funds. If you have a closed-end fund, it has to be closed-end, that owns gold and silver, then you can get out with preferential capital gains treatment. Another way to do that is by owning mining stocks. If you own gold mining stocks and you sell those at a profit, then you're taxed at a long-term capital gain if you hold it because it's a stock. But yeah, bullion, physical gold, and coins, as well as, stamps and memorabilia and works of art are all taxed as collector's items, and they have a collector tax rate that is higher than the capital gains tax rate. Anyway, hey, thanks for calling. We've come to the end of the show. Again, we'll be back tomorrow with another 2 hours of the Peter Schiff Show here on SchiffRadio.com.